Making cash money on the Forex market. All of you Forex traders and wannabe millionaires, you got to listen to me. I've got a secret to tell you. This secret will allow you to make a lot of money on the Forex market. This secret is my secret, but I'm willing to share it with you today. So use it at your own discretion. Counter trend trades. Now, typically speaking, I would say don't ever in your life make trades that don't go with the overall trend. But if you like to be a degenerate and you like to take some high risk trades and you like to make a lot of goddamn money, counter trend trades can flip your account at the highest rate. Counter trend trades can also destroy your account very fast because it still is stupid. But it's a good way to make a lot of money, and it's a degenerate way to make a lot of money. And if I don't know about you, but I like these high risk things, and sometimes I like to do these counter trend trades. And today I'm going to show you Leon's hot takes on how to commit to a counter trend trade and how to maximize it and actually make money from counter trend trading. It's doable. I'm going to show you the method to the madness. You need to take this method and utilize it, and then you can make money counter trend trading. Don't listen to anybody else talk about counter trend trading. You listen to me. Let's have a look. All right, so there are a few ways we can do these counter trend trades. Typically speaking, it is when the weekly or higher time frame, we'll just call it higher time frame, is either at the very top of a move or at the very bottom of a move. And we will look for counter trends here, and we'll look for counter trends here. Now, you would want to see something like this in your weekly before looking at thinking of a counter trend trade. So mind my beautiful drawing. Let's just say we got a couple. All right, so we're at the top of the move, and then you want a, right there, a little doji or something like that, some sort of rejection from a top. If that's happening on the weekly, then you can cross down to the daily, and it should be something like this. You got your beautiful candlesticks. You want a bit of a doji, bit of this, bit of this. Then you have this, so you have some sort of accumulation at the top. Now you can look at this. So you look at the doji on the weekly, and you look at the daily, and you're like, oh, there's a little doji here, there's some accumulation here, it's stuck at this level. It may go down from here for a pullback, because again, if this is the trend and it's going up, it's going to continue going up, but you can get in on a slight pullback to an area to continue up. Right. So if you had the weekly and the daily at the top of the move, your 4 hour, this is where we get into it. The 4 hour can be at the top. We had the doji, and now from the 4 hour, you want to see some accumulation as well, and then bearish movement. Bearish movement. You see, here we have the bearish engulfing candle. It's bigger than this one, and therefore we know, look, tides are changing. Tides changed, buddy. We could be going down. Now, you still do not enter the trade. Let's bring it down to the 30-minute and lower. This is the key here. If you're seeing the weeklies at that top point, and there's the doji, you see the dailies at the top point, there's some rejection from the top, and then you see the 4 hour having slight bearish maneuvers, this is where we get the cake. This is what the 30 minutes is going to do, and this is what we're going to wait for. We're going to wait for this to come down and carry on. So now we have a shift of structure. Higher high. This. Higher low. This is bullish. But once on this 30 minute, this comes below here and breaks below it to the downside. Now we have a lower low and a lower high. This is shifted structure. 30 minute is now bearish. Now once the 30 minute turns bearish, and all these higher time frames are rejecting a higher spot, and this 30-minute becomes bearish. This is when you know I can get on a sell somewhere here. And this is where you will see you had your shift of structure. Here on this pullback is where you will enter. You wait for the pullback and then an engulfing bearish candlestick, and this is where you will enter your sell. Mark your stop loss at the previous structure and the previous higher low, and then you will take your take profit down to the next lower structure point. Usually what you would look for here is if weekly is going up, daily is going up, everything's bullish, you're only selling on a pullback of these higher time frames. So you want to only get in and set your take profit at the next structure where there's been some rejection. This is another structure point. You would take the sell from here and ride it down to the next structure point for when it would continue to the upside. And this is the counter trend trade. Wait for the change, look for some bearish movement, take the sell down to the next area of interest and structure point, and take profit before it heads back to the upside. And that's counter trend. So quick recap, because my drawing is probably atrocious. So let me just word it for you so it can stick in your brain. You will get in on counter trend trades only when the higher time frames are at the highest point or lowest point, or they're at a higher high or lower low, and you know there needs to be a retracement. But that's not all you do. Now you wait for those higher time frames to give you some sort of confirmation that it's about to shift. You need those dojis and you need those rejections and accumulation from the top point to really know, okay, there's something going on here. The trend is slightly changing and I think it's about to change for a pullback. That's when you will drop to the daily. You'll see that doji, the accumulation, even a little bit of a bearish move. And then on the 4 hour, you'll hope to see an bearish engulfing candlestick. And this is how you'll know, okay, if there's a bearish engulfing candlestick on the 4 hour, there's some movement happening and it's rejecting that top point. So it's going to have this pullback. That's when you can drop down to your lower time frames, like the 30-minute, and wait for a shift of structure. So once it turns from bullish to bearish on that 30 minutes, then you can be like, wow, it's changed structure here. Now it's bearish. I can expect it to do similar on the higher time frames to create a pullback. And then you wait for the 1 hour engulfing candlestick after you've had that shift of structure with the pullback. And then once that engulfing candlestick happens on the 1 hour, you place your entry and you take the profit at the next structure point on the daily or the weekly where you would expect that pullback or that higher low to be before it continues with the trend. And that is counter trend trading for you. Good for some money making, very risky, so be careful when you make these trades. But like I said, it's fun. If you can understand the market a little bit and the movement a little bit, you can make money and capitalize on them. Do what you will with this info. I'm telling you, I'm warning you, it's risky. It's up to you now. Take this advice and make some money. Make sure to subscribe to this channel if you want more in-depth knowledge on leveling up and money making. And also hit up my mailing list to receive free weekly emails with even more in-depth knowledge. Trust me, you don't want to miss out on these things. They're amazing. So until next time.